Our next guest says it's all about stimulus and that the blue wave might be more bullish than investors originally thought. Joining us now is David Rosenberg. He's president of Rosenberg Research. David, it's good to have you back. Do you seriously think we're going to have $2 trillion worth of stimulus coming down the pike now?
I think it's probably going to come fairly soon. And we know that because when we got the $900 billion that was already passed, Joe Biden said, well, that's a down payment. But when he said it, Mitch McConnell was head of the Senate, not Chuck Schumer. So I would say that the odds that we get something very big, something close to what the Democrats wanted initially, is probably going to come very quickly. And that's exactly it's the stimulus, Kelly. This market thrives on monetary and fiscal policy stimulus. That's what this is all about. That's why investors could look through the horrific events yesterday on Capitol Hill. It is all about the stimulus. And, you're asking me whether we're going to get it or not. I'm assuming we will. But the markets have already priced that in. That's what we're seeing every day for the past couple of days.
Well, that's pretty extraordinary, because if we don't get it, then that's going to leave a $2 trillion hole in expectations. So let's turn this into GDP terms. If I'm reading you correctly here, you think this means we go from basically flat or zero GDP growth to upwards of 7%?
Right. Well, without any stimulus at all, that's why I want to go back and say, is the economy fundamentally weak or fundamentally strong? It's really hard to say. But look, the training wheels are still on the bicycle. If we didn't get any stimulus at all, let's say nothing got passed, I would actually say that first quarter GDP would be negative. With the stimulus that's already coming in, we'll probably be 3% plus. That's what the stimulus already in. And you're right. If we get the extra dosage, which is what the Democrats want, and now they're running the show. I'm not so sure it's a blue wave, but they do have more control than we thought they did just a few days ago. That all of a sudden, first quarter growth could easily be 7%, given that amount of stimulus that'll come into the pipe.
So when, how much is too much, Dave? Because we are seeing the 10-year back up, inflation expectations above 2%, the Fed's starting to talk about a taper, or is this simply the way that the fiscal side pushes them to start shrinking the balance sheet and normalizing? Right.
Well, look, the taper is still very much conditional, and I think would take place earliest late this year under the proviso that we really get sustained acceleration in growth. And we have to take a look at, where we are right now. I mean, we'll get a fresh employment number tomorrow. The unemployment rate is 6.7%. But, when you're taking a look at the percentage of the labor force that's unemployed and underemployed, you have 1 in 8 Americans right now that fit that category. There's still tremendous amount of excess supply in the product market, in the labor market. The inflation people are talking about is primarily because the dollar's been weak and you've had the commodity bounce back. But you're not going to get inflation without wages, right? It's not going to happen. So I think that it's very much conditional. The Fed's getting ahead of it right now, just talking about it. I don't think it's going to happen until we get really sustainable, strong growth. So that's still an if.
Still.
Shepard Smith here. Thanks for watching CNBC on YouTube.